The digital asset landscape is undergoing a significant transformation, and at the heart of this revolution lies Bitcoin. This groundbreaking technology boasts unique characteristics that are fundamentally altering the way we perceive and interact with value. Today, we delve into the intricate details of Bitcoin, exploring upcoming events like the halving, its historical impact on price volatility, and the ever-growing institutional interest it's attracting. The impending halving and its impact on supply dynamics. One of the most anticipated events in the Bitcoin ecosystem is the halving. This pre-programmed mechanism, occurring roughly every 4 years, reduces the block reward for miners, the individuals who validate Bitcoin transactions and secure the network. This imminent event signifies a significant decrease in the rate at which new Bitcoins enter circulation. The last halving transpired in May 2020, slashing the block reward from 12.5 BTC to 6.25 BTC. This reduction in new supply directly impacts Bitcoin's core tenet, its finite supply. With a maximum limit of 21 million coins ever to be mined, the halving event essentially creates scarcity, a fundamental principle driving value in traditional assets like gold. Price volatility, a historical perspective. Bitcoin's price journey has been nothing short of a roller coaster ride. While its long-term trajectory exhibits impressive growth, short-term fluctuations can be quite dramatic. Recent events, such as the dip below $60,000 in late February, exemplify this volatility. However, it's crucial to recognize Bitcoin's resilience in the face of these fluctuations. Despite short-term dips, Bitcoin has consistently demonstrated an upward trend over extended periods. Institutional interest on the rise, a catalyst for growth? The recent approval of spot-based Bitcoin ETFs, exchange-traded funds, has served as a major catalyst for institutional interest. These instruments allow institutional investors to gain exposure to Bitcoin without the complexities of directly acquiring and managing the digital asset. The underlying principle behind these ETFs mandates institutions to hold the equivalent amount of Bitcoin as the fund's net asset value, NAV. This not only simplifies institutional participation but also removes a significant amount of Bitcoin from circulation, potentially influencing its price positively. A prime example is the Purpose Bitcoin ETF, BTCC, launched in Canada. Within a few weeks of its debut, this ETF amassed over $1 billion in assets under management, demonstrating the immense institutional appetite for Bitcoin. The gradual pace of institutional adoption. While the approval of ETFs signifies a significant step forward, it's important to acknowledge that institutional adoption of Bitcoin is a gradual process. Unlike traditional investment vehicles, Bitcoin necessitates the establishment of robust infrastructure to ensure secure storage and reliable trading platforms. Additionally, regulatory compliance measures require careful consideration by institutions before offering Bitcoin exposure to their clients. This measured approach, while necessary, underscores the growing acceptance of Bitcoin as a legitimate investable asset class. The increasing participation of prominent banks and asset managers signifies a shift in perception, paving the way for broader institutional adoption in the future. Navigating the murky waters of price predictions. The future price of Bitcoin remains a topic of intense speculation. Analysts and experts, employing various methodologies, have made predictions based on historical trends, Bitcoin's supply dynamics, and the evolving landscape of institutional adoption. Some optimistic forecasts anticipate Bitcoin reaching the $100,000 mark in 2024, with the potential to surpass a staggering $1 million within the next decade. However, it's paramount to recognize that these predictions are inherently uncertain. The cryptocurrency market, still in its nascent stages, is susceptible to a multitude of factors that can significantly influence price movements. Market sentiment, a balancing act between bullishness and caution. Despite warnings from some financial institutions like Goldman Sachs, the overall market sentiment towards Bitcoin remains largely bullish, particularly when considering its long-term prospects. Several factors contribute to this optimism, including geopolitical tensions, rising inflation concerns, and the ever-growing involvement of institutional investors. These factors are envisioned to propel Bitcoin's price upwards in the long run. However, it's essential to acknowledge the potential for short-term volatility due to inherent market dynamics and unforeseen external events. The intrinsic value proposition of Bitcoin. Bitcoin's appeal transcends its price fluctuations. It's increasingly viewed as a digital store of value, akin to gold, offering a hedge against inflation. This perception stems from its aforementioned finite supply and its decentralized nature. Unlike traditional currencies controlled by central banks, Bitcoin operates on a decentralized network secured by blockchain technology. This innovative technology eliminates the possibility of single points of failure, censorship, and manipulation, making Bitcoin a highly attractive proposition for investors seeking alternatives to traditional assets. The scarcity and censorship-resistant properties of Bitcoin are considered key drivers of its adoption and long-term value appreciation. The ripple effect, industry experts weigh in. The broader crypto market's future is also viewed with optimism by industry leaders like Brad Garlinghouse, the CEO of Ripple. He anticipates continued growth fueled by the diminishing supply of Bitcoin due to the halving event, coupled with the rising demand generated by ETFs and increased institutional participation. Garlinghouse's confidence reflects a wider sentiment of long-term viability and mainstream adoption for cryptocurrencies like Bitcoin. Conclusion. In conclusion, Bitcoin stands at a pivotal juncture. The imminent halving event, coupled with growing institutional interest and its unique characteristics as a digital store of value, paints a promising picture for its future. While short-term price volatility is inevitable, the underlying fundamentals suggest that Bitcoin has the potential to revolutionize the financial landscape. Please go ahead by liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.